Good afternoon and welcome to the end of day market review from March 22nd, 2012. My name is Jason Waugh, one of the trainers and success coaches with Ideal Trading Lifestyle. I'll be walking us through today's presentation. Now before we get started, we are going to ask that you give this disclaimer a quick read. Once we're done, we're going to go ahead and get into the agenda. All right, so start things off, we're going to go ahead and start with the daily news. With this, we're just going to be seeing what's going on a global scale and seeing how it's going to be affecting the U.S. markets. We're then going to go ahead and take a look at the market outlook. Now, this is going to include analysis on the S&P 500. When we do this, we're going to be looking for its support and resistance levels, as well as the current location of the MACD. We'll then jump over and take a look at our volatility indicator, the VIX.X. With this tool, we'll be able to figure out just how much fear is in the marketplace and as a result, how much volatility is influencing the markets. There's nothing on our current watch list right now, and there wasn't anything yesterday, obviously because yesterday was a down day, and we ended up having a follow-through with some negative trading today. So as a result, we'll fast forward through that and get into preparing for tomorrow. Now when we do this, we're just going to take a look at what all of this means for our basic and for our advanced customers. They end up following a lot of the same disciplines, but there will be some parts where the advanced customer can branch out and do a little bit more independent work. Obviously though, if anybody has any questions, you can send in a message to our chat box, or you can raise your hand. If you raise your hand, we will unmute your line and answer that question verbally. But obviously, all questions will be answered at the end of the presentation. So make sure that you've got yourself ready for that. So with that said, let's go ahead and dive right into the news. All right, so first off, we can see that the markets ended up having their third day of some dismal trading. The U.S. markets really have been pushing themselves up higher, and almost as if they've been blindly doing so. There has been a lot of pressure going on from outside sources, Europe to name one, recently China with their slowdown with data reports coming up, and obviously the dramatically increasing price of oil. Now, all of those have and should have contributed to a pullback sooner. We did end up having what looked like was going to be a pullback last week, but the markets decided they just wanted to keep on going. So whether or not this is now the market waking up and accepting the pullback that it really has been inevitable, or if we're just going to end up pulling back, trading casually for the next couple of days, and then working itself back up to newer highs, is really going to be dependent on the day-to-day trader that leads the markets. So we're going to keep our eyes out for the ongoing news to see just where people's emotions are. Speaking of the S&P 500, we can see, based on this chart here, we've found 3 levels of support that have been broken. Now, the first level of support that's been broken has been the psychological 1400. Right now, the S&P down to 1362.78. We've broken what was a benchmark in the marketplace. We've also come back down below our major support level, which has been the rising supporting trend line that was established back in late December. Now, this isn't the first time that this trend line has been violated. It did happen last week as well. So this isn't necessarily the end of the world, but it is a second notch for the bearish side. The third thing to note is that the MACD has now had the black line cross down below its blue EMA. And this has been the first time that we've had that cross down since the beginning of March. So we've got a few things that are going on there. 3 reasons why we can expect further losses. But again, it really is going to just depend on what's going on from the overall market standpoint. We've got other supporting indicators that our advanced customers would be more used to, and they would also signal selling in the near future. Changing gears here and taking a look at the volatility indicator, we can see that this indicator is now at 15.57, a little bit higher than what it was yesterday, which is confirming that the volatility is starting to increase. People are becoming a little bit more concerned with what's going on, but looking at where it's realistically at in the 15s, it's still within a very healthy trading range. It really isn't going to be until it crosses into the 20s that we would be a little bit more concerned and actually believe that we're going to start going into a downward cycle. And then obviously as it crosses up above 25, we would start to really pull back on our positions and expect to see slower trading over the next short while. And then if it crosses into the 30s, then we know that we're probably into a correction and trading is going to be minimum at best. So there you have it. What does this mean for our customers? Well, it means for the basic customers, we are done trading for the week. We're going to see what ends up happening tomorrow, and we're going to end up seeing how that's going to influence Monday. If Monday morning we've had good trading on Friday and good stocks that look like they're worthwhile, and on Monday morning we have good futures and opening news, then yeah, we can go ahead and trade. Otherwise, it might end up being Tuesday before we consider a trade. For our advanced customers, this doesn't mean that you can't trade tomorrow. It just means that you need to go ahead and start looking for some inverse ETFs. We're obviously expecting another decline, so we want to get ourselves prepped by that. Some of the materials have been some of the leading losers in the marketplace today, so that might be a good place to start. Obviously, you can also look at some inverse ETFs for the S&P 500 or the Dow as well. If you do plan on trading inverse ETFs, make sure that you're looking at the opening news and futures tomorrow morning to see a confirmation of declines. If there's any optimism or signs that the markets might work themselves back up for weekend, you're going to want to cancel those inverse trades. All right, so with that said, does anybody have any questions at all? Anything that might be related to what we've discussed at this point? I'll just keep the line open for a couple moments. If not, we will call it a day. All right, well, it looks like everybody's content and happy to go. So, as per usual, we will touch base again tomorrow, and we'll see what's going on with the markets. Thank you for attending today's presentation for March 22nd, 2012. Ciao for now.